Welcome back to Golden Rule Radio, your weekly recap of the precious metals markets. And let's take a quick look at that recap because we're seeing quite a lot of movement across the board here. Where did sell in May and go away go? Because we are seeing gold up $80 from our recording last week, currently sitting at $2,388. That's about a 3.5% move. Since we recorded last week. Silver, not to be outdone, in fact, quite the opposite, up to $29.70 at the moment of recording. That's $2.35 an ounce. It's come up since last week. That's 8.6% just in the last 5 trading days. Platinum at $1,065, beating out silver slightly, up $90 and 9.3% since last week. And palladium is actually doing okay, although still sitting below platinum at $1,010. It's up 5.8%. Looking over at the markets as a whole, the stock market is hanging in there. The S&P at 5,307, 5,307. It's up 120 points. That's 2.3% since last week. And this is all sitting on the shoulders of a declining dollar. The dollar down to 104.3. It's down over a point in a week, 1.2 points in a week. That's a little over 1%. So it seems like the dollar isn't doing great. The metals are responding exactly how you would expect them to on a dollar decline, and the S&P and Dow are actually doing okay on the flip side as well. Is the bond market coming unraveled? What's happening here, guys?
Well, I think a lot of it has to do with expectations. It's like the whole world is focused on these rate cuts and what the central bank's going to do, the Federal Reserve. Every time a piece of economic news comes out, whether it's the PPI or the CP lie, it's like the markets love to just speculate as a result of that and respond. And with the dollar being down that much in a short period of time, gold should be up. It should be doing what it's doing. But you're seeing this across the board. Copper, 26% year to date.
Yeah,
right?
Copper is screaming.
Yeah. Oil has rallied.
Dr. Copper is telling us something.
And what does it normally tell you, Rob?
That silver is going to go up.
Well, there you go, right? So broad-based commodity rally may be in store, which is, again is an indication of inflation. But it's amazing to me that inflation can be up 3.4% year over year. That's the April number. And yet the markets get excited about that now because it's not 3.5%. Right. Inflation's still climbing. Everything's still gotten more expensive. But yeah, the dollar turns down. My theory is that it's on an expectation of a possible rate cut now. I don't know if that's a June thing or a July. Powell says it's not likely a June thing. He said the next move will not be a cut. He said that yesterday, that things will likely remain unchanged and that he's accepting higher for longer rates. But the market's not listening?
No. And the bond market is actually doing okay. Yields have dropped 2% on the 10-year, 1.8% on the 30-year. So money is flowing into the bond market in anticipation of a rate cut.
Well, there you go. And that's, again, what you should see gold do. When those yields are dropping in the bond market, in the treasury market, then you should see the gold price have a little bit less of a restriction on it. But this is going to be pretty fascinating. I mean, in this whole rally, I'm not getting as excited as I was for the pullback that we've been hoping for. It's moving against me. I'm just going to say
I thought silver was going to drop. I really did. And not with copper. Not with copper up 25, 26%. Yeah. It's not going to drop.
Well, and not with inflationary expectations or dollar debasing expectations of rate cuts and the effect that that has and market rallies and everything else. But some weeks we kind of feel like it being your weekly recap of the stock market because all three of the indices are now closed at record highs.
Yep.
I mean, Miles, you mentioned the 5,307. That's the S&P 500's 23rd record close of the year. So 23 times in 2024, it's closed at a record high. The Dow is closed at a record high 18 times because it's over 39.9.
Yep.
And the NASDAQ, 8 record closes this year to join the party, not at the same level as the other two. But, man, this is not good.
No, we're setting ourselves up. And Miles, like those zeros, people get fixated on zeros. The Dow's closing in on 40,000.
Yes. Yeah, when it breaks through, it'll be all the headlines.
Yeah.
And people understand that more for some reason than the S&P
Yeah.
closing over 5,000 when it did. It captured headlines, but yeah, the Dow at 40,000 is going to be a headline grabber.
Yeah.
Let's go back and do a deeper dive on gold and silver, because in this period of time, like you just talked about, with silver being up 8.6% to gold's 3.7% in this week, what's happened to the ratio, Rob?
80 to 1.
80 to 1. There's a round number right there. Do we keep going down? Down, down, down she goes.
It sure looks like it, and I didn't think so a week ago.
Yeah. Most importantly, if we could really see that ratio tighten substantially.
Oh, gosh, that would be wonderful.
Yeah.
Yeah, seasonality, I thought spring market had peaked, and I thought we would be settling back to some of our support levels like we talked about last week and kind of moving sideways into a summer season, kind of a doldrum almost, but I don't think so.
Well, yeah, I mean, it has yet to play out. I'm not going to get excited, and we'll turn to the chart expert here until silver closes above 30.
Yeah.
Right? So,
or 32.
Or even closes a week above $30. Because right now we're hitting our head on the same ceiling that we've been dumb enough to hit our head against multiple times in the last number of years, unable to break through that 30 really substantially.
Right.
Miles, let's start with silver in that chart because we're sitting at that high.
Yeah, I think starting in silver is a great place because silver is pushing in towards that February 12th high right at 29.80. We're just a couple pennies away from it now at this point, and a pretty healthy move. I mean, we're talking about silver looking at, again, pushing to pricing we haven't seen since technically 2021. We did technically get above that, but it sort of stopped there, and I don't really care about intraday highs.
Right.
I want to see consistency and strength. So really we're talking about pricing going back to 2013 when silver was done with the last bull market and on the way back down. What a shocking surprise. Silver's doing exactly what gold did, just a little bit later. It does it bigger, it does it faster, but it just takes longer to kind of get up and running. So just like gold did, highs in 2020, tried to inch above it. Well, now it looks like we might be inching above it. And I wouldn't be surprised at all, since gold has not only broken those 2020 highs, not only moved into all-time high territory, but not showing the decline back down thus far. There is absolutely still room for the decline, so don't give up yet, guys. I heard you guys there talking about how you really kind of wanted to see it come back down. You haven't lost that option yet here.
That's right. I'm not switching camps yet.
Yeah, you're not switching camps yet.
I'm just discouraged on the timing.
Yeah, Miles and I, we flipped again.
Yeah, when I
now
go bearish,
I'm optimistic and Miles turned bearish.
Yeah,
What a
it's
week.
coming in June.
Well, it's just I'm right, and then you guys are whatever you want to be. That's just kind of how it works, right?
The life of a chartist. Yeah, he can just pull it from any time frame that he wants.
The beautiful thing about charts is you can make them tell whatever lie you want them to. So, which is
sounds
why I
like a Washingtonian economist.
But the real story is, for the last 5 years, silver has hit 30 and backed off.
Yep.
Period.
Yeah.
We did it in 2020, 2021. Now we've done it twice in 2024.
Well, I would argue that this is the third time. Going back, I mean, they were really close together, but we did try twice over 29.50 to flirt with it.
It's technically the fourth time.
But Dr. Copper is weighing in now.
Okay.
And my money's on Dr. Copper.
Yeah, you're seeing natural gas pick up. You're seeing oil pick up.
Yep.
I think you're right, Rob. I mean, the commodity pricing, and call it a lag, call it a reason for the PPI and the CPI and everything else to be climbing. The two biggest factors in the current CPI numbers are rent and gas. So those two alone attributed to over 70% of the April inflation number.
On the PPI.
On the CPI.
Oh, on the CPI.
Yeah, CPI. Remember, we call it CPI. And really what that's still showing, that's a drag on the economy. Rent and gas leading the charge is a drag on the economy. They're purposely slowing the economy down. We're still in the threat of a stagflation, even though Powell denies it. Inflation is still climbing, but they're knocking employment down aggressively. The numbers now, last week, with what we saw with non-farm payrolls, and then the unemployment numbers came out higher than expected. They're being successful in cooling the labor market. And that's great for inflation. Not great, but it's effective, but it's bad for the economy. You're in an election year. the market is saying they're still hopeful on a rate cut, and the Federal Reserve is staying neutral. They're not as dovish as they were. It's just we all kind of have a front row seat. We don't know what's going to happen, but the market action today is telling us that now the expectation again is for a rate cut come June, July. I don't think they do it September, October. Like
Too
that's
close to the election.
Yes. I don't think that would be a pill that would be easily swallowed and not looked upon as election interference in a supposedly politically neutral entity.
No, they absolutely can't. There's the general understanding that in an election, I think they're going to do everything they can to kind of keep things as stable as possible. The world, on the other hand, doesn't tend to agree with the Fed, at least always, as far as timing goes, because I can think back to a couple election years over the last 20 or 30 where we've had pretty significant geopolitical and economic events all take place. So 2020, 2008, 2000, we've had some rocky election years through the decades. Yeah, I think you're right. I can't imagine that we see much interest rate movement this year. And if we do, it probably would be sooner than later.
Yeah, so let's transition to gold because it's kind of getting ready to hit its head here. I mean, we're, $35 from the all-time high that we put in 2024. It's nothing like the S&P 500 at 23 highs from a record level this year. But are we going to touch that? Are we going to meet resistance there? Is this the attempt that finally breaks out? Or is it like Miles added late there? Is this just one more failed try? Then we get our pullback. Then we get a fall rally.
I think it's much more likely in gold than it is silver. Gold hitting its top and then backing off. I think silver is looking incredibly strong, but it is silver. You can't trust it.
As soon as you do, it'll break your heart.
Exactly. Let's go back 35 years on that one.
Yeah.
Right.
It's like a long suffering marriage.
Yeah.
Yeah. But what about the gold chart there, Miles? Anything changing your tune?
Sure. Well, the big thing for me is because the move's above 2,400, we had to move up to like 2,430 something.
Yeah.
Then we had another move up to like 2,420 a couple days later. This is going back on the 12th of April and then again on the 18th of April. But realistically, the ceiling are the double zeros, 2,400. We had a lot of head banging right there at 2,400 between about April 11th and April 19th with two little, very quick 45-minute, hour-long spikes up and down. So those spikes I'm not too concerned about, and we're not too far away from 2,400. So I think the decision point is closer. Now, if we inch above 2,400 and start moving up towards the intraday highs, I'm staying bullish. You know, it's I think 2,400 means a heck of a lot more than 2,435 does. At that point, you're just looking at a little intraday high, and that can just be order filling on the futures market. Sometimes a bunch of orders get filled at a double zero number, and it causes the price to shoot up for an hour. So the big thing for me, and the reason why I'm actually remaining slightly more bullish on gold, is because of the very shallow pullback that we had. You know, this last move up going from like 2280 up to over 2,400, which ended up becoming the 382 fib retracement. When we go back to the start of the move, back 2000, 2050, you know, going all the way back to March, beginning of March, it was a very shallow retracement and we're on the way back up. So my argument would be the ultimate high over that couple week period, I don't really care about. I do care about 2,400. If we see pricing above 2,400, I'm going to be nervously bullish there. And it's probably going to drag silver along with it. And I think there's a good argument that percentage-wise, when gold goes up, silver goes up more. And when gold goes down, silver goes down more. So if gold continues up, it's going to drag silver up with it. And I think your 80-to-1 ratio gets pulled down to 75 or 70.
It could be, and let's recall back in February when we did that silver buy signal, I mean, the ratio was 92-to-1.
Yeah.
And Rob, you did that deep dive on silver's performance. When it crosses 90-to-1, what do the subsequent 4 months look like? Well, here we go. We're up 36% from that silver buy signal,
and
right?
it still has more room.
Right. So you bought your silver on that day, and now you're selling it at a 36% profit, right? No, but that ratio coming down 12 points is huge,
Yes.
right? And I would love to see another 8 to 10 point decline, because anybody that bought in that range, I mean, now we are talking about a ratio trade. So we'll have our eyes on that continuation of that trend. But Miles, I want to pull in the moving averages on the gold and silver chart if we can, before we move on, looking particularly at that 50-day and maybe the 200-day, because part of the overshoot concern that we had was that when you get that separation from those moving averages, what goes up tends to come down and meet those moving averages. Well, look what's happened here. This spike, this is a parabolic move in a moving average, because we rallied that aggressively and we have stayed up here. That short pullback, that shallow pullback that Miles describes, is a really powerful thing when it comes to the moving average.
Yeah, where is the 50 and 200 day?
Well, the 50-day moving average is all the way up at 2277. It looks like right now, which, lo and behold, right where our 382 fib is. I know there's no correlation there. I just think it's funny that happens that way.
Well, it bolsters your support.
It sure
you've
does.
said that in the past.
Yeah.
Yeah, I'm not smart enough to figure out how you'd correlate those two to be usable data, but I like when lines cross. I'm a very simple creature. I like when one line intersects another line, and we've got lines intersecting.
Well, that's incredibly bullish. I may have to change my opinion about gold, because if the last two corrections, which were indeed very shallow at 2280 something, and now the 50 days right there, we've got solid support.
Yeah, well, let me stick a spear in your life raft, because your 200-day is all the way down at the start of this bull market, going back to March. The 200-day, again, I like line crosses. It's sitting just above where we started.
Yeah, a very short-term bull market chart.
Yeah, 2050.
Yes.
Yeah, sorry, most recent, move up from March 1st, the big push up.
So you're still 2050 though. I mean, listen to what you're saying. That's the 200-day moving average in gold.
That's crazy.
Oh, yeah.
So
I'm not disagreeing with that at all.
That's a 10% retracement in the gold price if we were to hit that. That's absolutely nothing. And again, I would love for it to happen. I would love to see that happen.
That would be amazing.
And then we have, again, this generational opportunity to add to ounces. And I'm not telling the listener to wait until then, but if you see it, that's when you back up the truck, right?
Well, yeah, and then look at the ratio. If we stay at $30 silver and we're at $2,000 gold, even I can do that math.
Yeah. Well, and if the ratio does come down lower, that does mean gold, a little bit more gold than silver. Where's that silver moving average, Miles? Let's throw that up here too, because that's a very similar spike on the 50-day and a very encouraging 200-day.
Sure. Well, and before I transition over to that, just as a key point, the last time gold touched the 200-day moving average was November. So it's been a while. It's been on a bit of a tear. You guys can tell I'm kind of everything that comes out of my mouth. One thing is bullish and then the next thing is potentially bearish, but we're still talking short term. Like, what does the next month look like?
That's right.
We all know we're in a real long-term bull market.
Oh, for
let's
sure.
not forget the trend.
Let's
but
not
it's
forget the
fun to
long-term
talk
trend.
about the minutia.
Yeah.
Silver, shocking. Same as gold, just more aggressive. The silver 50-day moving average is all the way back down at 2660 at the moment, which is kind of in between your 50% and your 382 fib, but it's quite a bit lower. But silver has had one heck of a run over the last day or two. And your 200-day is way down at 24. So silver has a ways to go, but silver got above the 200-day moving average just in March. So from a time perspective, it actually has been trading pretty linear with the 200-day moving average. And that moving average has been relatively flat since September, October last year. So where gold has been climbing, pulling that moving average up since October, November, silver's been sitting flat and then making this mad dash to catch up with gold since about March. So everything kind of falls into line with what's pretty typical behavior between the two metals.
Yeah.
And if you find those opportunities, when silver makes those mad dashes, sometimes opportunity presents itself.
Well, it's like we talked about at the end of March when we hit 92-1 on the ratio. Silver is going to have a run, and here we are.
Yeah. Not only was silver sitting below its moving averages at the time, and gold was still above, but you had the ratio so high, and the spot price had come down to touch the technical support level from a Fibonacci retracement level just below that $22 mark. So all of those aligned. That was somewhat of a fun call
Yeah.
to see. And now with retrospection or hindsight, you can say, okay, well, yeah, that was good. It's not always that clear. But what I want to know is, again, and I know what the listener does too, do we chase this price here? Do we add to ounces at this point? And I think if you don't own anything yet,
Well,
yes,
yeah, you want to get started.
That's right.
But I think the litmus test is, can silver spend a week above 30 like you mentioned earlier? Now we may be onto something at that point.
Yeah. And Miles, you've been calling for months that when that happens, we are likely going to float pretty freely to 31, 32, then 35. That it'll be somewhat unchecked if that actually is happening.
Because you want to buy on strength. Okay, it's one thing to try to grab a falling knife like so many people warn you about, but also you're successful traders, and we're not trying to be day traders here, but you really do want to buy momentum. You want to buy on strength. What does that strength need to look like? Well, let's watch silver at 30 for a week, and then let's talk.
Yep. And we're always going to point you to a coinciding underlying fundamental market. Nothing has changed fundamentally.
No.
And because of that, we can have much more fun with charts as long as the underlying fundamentals remain intact.
Right.
That's going to do it this week for Golden Rule Radio. As always, we appreciate you stopping by. If you liked what you heard, hit the subscribe buttons below. You can also find us on Twitter at ICA Gold or Facebook at McElvaney Financial. Better yet, why not give us a buzz? Talk to us about your personal precious metals portfolio. We're available at 1-800-525-9556. And you can find some additional info on our website at McElvaney.com. Thanks again for joining us, and we'll see you next week.